Okay, today's section is section 1-2. This is pages 10 through 12 in your textbook. It's fairly short. Make sure you read it if you were gone so you can understand it better. And this whole section is going to be how business activities change the accounting equation. And just as a refresher, remember our accounting equation. It is assets equals liabilities plus owner's equity. And the left side must always equal the right side, as in any accounting or any equation. So our first thing we're going to be doing is receiving cash. Now, a transaction is a business activity that changes assets, liabilities, or owner's equity. So we're going to be doing lots of transactions. We have our accounting concept, unit of measurement. That just means that business transactions needed to be stated in the same amount of dollars. So what that means, if you're doing business in two different countries, you need to be having your financial records use one of the types of currencies, whether it's euros or US dollars or whatever else there is. It needs to be stated in the same. You can't have half a financial report in one type of currency and the other half in a different type. So, a little bit more terminology. Accounts, a record summarizing all the information pertaining to a single item in the accounting equation. And the account title is the name given to the account. So the one we're going to use most of all is the cash account. The account balance, this is the amount in the account. And capital account, this is used to summarize the owner's equity in a business. So our first transaction example on here is transaction, the first one, August 1st, received cash from owner as an investment, $5,000. So we received cash, so that means our cash is going to be a plus next to it. We have plus $5,000. We like that. Now, the owner's equity, the account we use for this is called Kim Park Capital. She is also increasing her capital amount because she has invested in the business. So we have on the left side of our equation plus 5,000 because we received cash. We also have on the right side of our equation plus 5,000 because Kim Park has invested $5,000 cash. So our new balances, there's assets 5,000, our cash account, liabilities is 0 still, and Kim Park Capital, which is our owner's equity, is $5,000. Now, if I were to invest in a business, it would be Mrs. Evansold's capital. Okay, paid cash for insurance. This account title is going to be prepaid insurance because insurance premiums are paid in advance. You pay it maybe 6 months. You could do a month, 6 months, a year in advance. Another common thing that happens is when you were to buy something but pay for it at a future date. And businesses do this all the time. You call it items bought on account. And the common name that we'll use is accounts payable and then dash the company's name. So if I charge something at Cenex, it would be accounts payable dash Cenex. So a little more examples. These are right from the textbook. If we paid cash for supplies, supplies is a new assets account that we have. Supplies could be books, paper, desk, anything. So if we paid $275 for cash, our cash account would go down because we are paying cash. It's leaving our bank account, but we are increasing the amount of supplies we have on hand by $275. As you can see after that, our balances are on the first line and they are all equal. Now, if you were to pay cash for insurance, our cash, anytime we pay cash, it's going to be a minus. Our cash is going down, and our prepaid insurance is going up because our value of prepaid insurance that we have is now $1,200. Okay, next we're going to do a couple of examples. These are ones that I have made up, and then I will go ahead and go through the work together really quickly as well too. So our examples, this is going to look a little bit different than the book setup just because I've created this table here in PowerPoint. So our first example, August 1st, we received cash from owner Kim Park as an investment, $2,000. Now anytime we receive cash, that is going to be a plus. And as of right now, you do need to put the pluses and minuses. So we're going to plus $2,000. You do not need to put cents at this moment. And then our Kim Park capital is also going to increase by $2,000. Now what you're going to do on the next line is you're going to put your balances on top of this little cell. So our new balance of cash is $2,000. Our supplies, 0, 0, 0, $2,000. Now after each transaction, your accounting equation must equal. So all of our assets over here equal our liabilities and owner's equity. 2,000 equals 2,000. Alright, our next transaction that we have on here, August 2nd, paid cash for supplies, $200. Now remember, anytime it says paid cash, you're going to be minusing from cash. So we can go ahead and put in here minus 200 for cash. And then for supplies, we bought supplies, so the amount of supplies we have is increasing, so we are going to go ahead and plus $200. Now we're done with that one, so we're going to go ahead and put our running total here. 2,000 minus 200 is 1,800. We now have $200 in supplies, 0 for prepaid insurance, still 0 for liabilities, and then $2,000 for our owner's equity. And you're going to keep that running total going for each of these. Next one on August 3rd, paid cash for insurance, $600. Since we are paying cash, we're going to go ahead and subtract $600. But our balance of prepaid insurance is increasing because we now have prepaid insurance. So our prepaid insurance is going to be plus $600, and then go ahead and get your running total. So 1,800 minus 600 is 1,200. Go 200. We now have 600. And as far as I know, you will not have any negative amounts for any of these balances. Alright, our next one on August 4th, we bought supplies on account from Supply Depot. So this one is new. I mean, all these are new, but this one is particularly new. So if we were to buy supplies on account, we are not using cash at all. It doesn't say cash in the transaction anywhere, so we're not paying cash. At a later date, which you'll see on August 10th, we will go ahead and pay cash. So, bought supplies on account. First thing I see right here is the word supplies, so that tells me our supplies account is going to be used. Now since we bought supplies, we're going to be increasing that by $300. And then also, we need to go over to accounts payable, Supply Depot, and we're also going to go ahead and plus $300. Here's why. First of all, our accounting equation must equal. If I'm plussing 300 over here, on the right side of the equation I must also add 300. Another thing is the amount that we owe Supply Depot is $300 now. So we need to go ahead and keep that in mind as well too. So when we look at this, we see, oh, we owe them 300. If it was negative 300, then we wouldn't owe them anything. They would actually owe us money. So our new balances, cash is still the same. Oh goodness. Cash is a little bit small right now. That's better. So cash is $1,200. Our new balance of supplies, 200 plus 300 is 500. Prepaid insurance is still at 600. Our accounts payable Supply Depot is 300. And then our owner's equity is still going to be 2,000. So our last transaction that we're going to have here is on August 10th. We paid cash on account to Supply Depot. We paid them $300. So paid cash. Anytime you see the word paid cash, it's going to be a minus for cash. So minus 300. Now we're paying on account to Supply Depot. So what we're going to do, since we're paying on account, we also need to subtract $300 because we will now owe them nothing. Remember, your accounting equation must stay in balance. And your last step you're going to have to do is to go ahead and bring your totals down. You can see we owe them 0, and our capital will still be the same for this section here. Tomorrow we're going to learn what will happen when an owner takes money out of a business. So this is an example that I have, a great asset for you to use when working through your problems. Last thing I'll go through with you is the work together, which is on page 13. It tells you to write the answers to the following problems in the working paper. And so step 1 says for each transaction, place a plus in the appropriate column. If the classification is increased, place a minus in the appropriate column if the classification is decreased. Remember, our assets we have so far would be our cash, our prepaid insurance, and also supplies. Our liabilities so far is accounts payable, and our owner's equity would be our capital account. So our first transaction, bought supplies on account. So if you want to, you could even write the accounts above here if that would help you. But supplies is an asset. So if we bought supplies, they went ahead and increased. And then if we bought them on account, that means we owe money to someone. So the amount we owe was also increasing. Remember, your accounting equation must always be in check. Second transaction, received cash from an owner as an investment. So received cash. Cash is our biggest asset. So we're receiving cash, that is increase. The other account that's going to be affected is our capital account, and the amount they have in the business is also increasing. Third one, paid cash for insurance. So if we paid cash, that knows that cash is going to be subtracted. Now insurance, however, is also an asset, and insurance is going to be increased. Still, our accounting equation is in check. And the fourth one, paid cash on account. Cash is going to be decreased, and since we're paying cash on account, our liability we owe them is also decreasing as well. And as always, your homework is going to be the application problem 1-2, which is on pages 19 and on pages 20. Please pay attention. The first transaction is actually done for you, the received cash from owner as an investment. Make sure you keep your balances, and if you need to, go ahead and look in your book or go back in this video to get some help. Once you're done with it, please put your name on it and turn it in.